Mino Line Media presents the Business First Podcast.
Hi, all, and welcome to a new episode of Business First with Sonia Alleyne. I am your host, and today we are talking money, and we have the perfect person in-house to discuss it. Matthew Scott is a dear friend and former colleague, but he is also a business, investment, and personal finance journalist who served as the former managing editor at Black Enterprise and the Financial Times Agenda newsletter. Welcome, Matthew. How are you?
Thank you for having me. I'm doing just great.
Looking forward to having this discussion because it's a money one. And I'm going to ask the audience, the listening audience, to take notes because you have listed out a number of small business tax breaks that you're saying almost anyone can benefit from. And so looking forward to getting into that discussion. Just wanted to have before we get into the list, what is it that you feel that most people miss? You know, a lot of small businesses I've talked to a lot who have challenges around tax time, a lot of frustration around tax time. What is it that do you think that small businesses are missing in getting their paperwork together and making sure that they execute properly on their tax obligations?
Well, Sonia, that's one of the biggest things, getting the paperwork together. Um, Most small business people want to focus on the actual running of the business, and it's hard to do all of that and also keep a running tab of things that might be useful to you in tax time. Lots of times we're doing things so quickly and we just don't think about it. And when you talk about things that you're missing, it could be receipts, um, things that you do at the spur of the moment. There might be some emergency things that happen, and you're just worried about getting rid of the problem, but then you forget to make a note that you spent some money or you did something that could actually wind up benefiting you at tax time. So it's going to take some time for folks to actually get in the swing of what things they should be looking out for. And, it's a process. Nobody should feel like they have to be perfect at it because nobody is. And it's just something that we all have to work on. Taxes are hard. So no one should feel like, they are doing it wrong. We're all making mistakes, and that's why it's, we all need to have someone as a tax accountant to make sure that the things that we miss, they can pick up on it at the same time.
And so I'm gathering that you would suggest when you say that we should have a tax accountant, it should be somebody who has a business, an idea of, or a specialty in how businesses execute their tax obligations.
Right. There are accountants that specialize in individual tax returns, and there are some that actually specialize in business returns. Um, Also, you need to find somebody that actually has clients in the area that you do business. So, for instance, I'm a journalist. I need to find a accountant that has plenty of journalists as their clients because they'll know a lot of the little loopholes, and things that I might forget, or things that journalists generally deal with, to actually get those benefits for me immediately, and I won't have to really stress out about it. If you're in the restaurant business, you need to find somebody that does taxes for restaurants, et cetera, et cetera. That's going to benefit you in the long run.
Yeah, that's excellent advice. That's not something I would have thought, but it makes absolute sense. I would have imagined that if this person is a business tax consultant, that they would be able to work well across industry. But to your point, and even to an offline discussion we had, some of the research that you had found, there were things that you were discovering that the laws and the rules are always changing, and so you need somebody who stays up to date with with everything. So you listed a number of areas here, and I'm just going to go through each one, and then you can let us know benefits and how small businesses can take advantage of the tax breaks in these particular areas. Does that sound good?
But before you start, just let me say a couple of things. These are the list that we're going to go through. They are generally things that just about everybody uses in their business. You just have to understand and deal with it from a standpoint of um, I or my business needs these things. Anything that you need to run your business is generally available for you to take a tax deduction on. So just anything that you think of that you have to use for your business, there's probably a deduction there for you.
All righty, that sounds good. So we'll get started. And the first two are internet and phone, which you can't do anything today without the internet and your phone. It's amazing how times have changed, right? But those are two invaluable resources for business. And so, what can you tell us about the tax breaks there?
Okay, so the important thing to remember about this is the internet and your phone have to be used for business. So if you have a phone that you're using for both personal and business, just get a phone dedicated to your business. Because at some point, most of the time, they're not going to say anything about it, but the deductions are only supposed to be taken off if it's business related use only. So, but 100% of your internet use and your phone use can be taken off as a deduction during the year for your business. So if you decide that, hey, I need to upgrade my data feed because I'm doing a lot on the computers, you can do that and not feel like you're hurting yourself financially because you'll get that money back, or at least you'll be able to deduct those costs at the end of the year. But definitely make sure that you have a phone that's dedicated to your business, and you won't have any problem with that.
Next on the list is your subscription costs. I think that's something we kind of take for granted these days.
Definitely. When we say subscriptions, that's anything from publications, software services, which again, that's a big part of a lot of people's businesses.
Right. Like Zoom.
Zoom, even your Microsoft Outlook package, you can write that off if you're using it for your business. Some people use sales related software because they're into sales. There are other types of software that you might use to keep your business running more efficiently. Even your tax software, you might be able to get a deduction off of, because people use QuickBooks to make sure that they keep their books in order. You need that stuff. So you can write all of those things off, and it's 100% tax deductible.
So any service that you are paying monthly or yearly, you can write off if it is for business use.
That's correct. One other thing, like some people have cloud storage because they generate a lot of different types of files that they need. You can write that off too. And like I said, the accounting software, if you need that. And you can also do membership dues. This is important because some people need to be involved in professional organizations. So if you have a fee that you're paying to be in let's say a chamber of commerce, you can write that off as well.
Okay, that's actually very good to know, because professional development is actually very important, and some of those membership fees can be costly.
But again, it has to be for professional use.
Exactly. But what if it's a place where, all right, so if it's a so I get the Chamber of Commerce, but suppose it's a professional development organization where you can source clients. That would be the same or no?
It depends. Because if you're not a member of that organization, but you join to gain clients, there may be some wiggle room to actually get that through. You'd have to show that you're actually getting clients from that relationship.
And I guess it would depend on the type of business that you're in. So you had mentioned restaurants before. So if I am a part of a restaurant association, I'm guessing that that would be a good write off, right? But if it's more of a and I can't think off the top of my head right now, something that would be professional, but a lot of times is more networking, right? That could be called into question, is what you're saying, if you're not showing a direct business correlation.
Correct. Like you said, if you are in a restaurant, if you're a restaurant owner and you join a restaurant professional association, yes, then you should be able to write that off. But you might get into a little bit of trouble if you, let's say, you are you are a financial advisor, let's say, and you try to join as many organizations as you possibly can because you're looking for people to actually join as clients. That might be stretching it a little bit too much.
This one, I think most people will understand and have probably, hopefully, they're keeping their receipts for is travel.
Yeah, well, travel is something that we all do for our business. And some people are saying, well, this is one of the ones that changes every year. Um, some, well, it changes from year to year, not every year, but some from year to year. Sometimes travel costs change and the deductions change with it. Okay, so for instance, um, there have been some years where you could actually um, write off hotels and plane tickets for certain things, and then they kind of pulled that back a little bit. But right now, these are the things that you can write off: plane tickets, but it has to be a travel for business. Now, people will say, "Oh, well, I took a trip for business and then I went and had some fun." That's allowable, but again, you have, like, if you take a trip and you're at a convention, sure, you can have some fun during the convention, but it can't be, oh, the convention is 3 days and I stayed there for 2 or 3 weeks. You might get some pushback on that. The hotels, rental car costs, parking fees while you're traveling, the cost of your taxi ride to and from the airport, that sort of thing. Those are things that you can write off so long as they are in the course of you actually doing business. Business has to be the main reason why you made the trip, okay? And you should also keep track of any business travel expenses like your receipts, invoices, so that you can actually show those expenses. You can't just say you did it. You really need to actually have those physical receipts just to be on the safe side.
And so, in line with that, with travel comes meals as well.
Right. That will be the next thing we talk about. Some meals that you have during those business trips are deductible, but not all of them. And not every meal is 100% deductible. Some of the meals are 50% deductible, and again, it depends. Most of your meals will be 50% is deductible. When you're like entertaining a client, if you're running a business and you have employees, if you pay for your employees' meals, that would be 100% deductible. Like, let's say you have a retreat and you're paying for food for your entire employees. That sort of thing would be 100% deductible. And again, if you have a small group and you have a meeting and you have food for the meeting, that could be 100% deductible as well, but you can't overdo it. If you start overdoing it, then it looks like you're just, having free meals all the time. So again, yeah, again, this can be travel meals or meals that are connected with your everyday business. Okay? So if you're having clients and you feel like you need to have some food during those meetings, you got to use your discretion to make sure that you're not like overdoing it.
Auto expenses, and you talked about some of them. Well, you talked about traveling in terms of car fares, but if you're using your own car, to conduct business. Yes, talk about that. I know that some people have actually leased vehicles through their business as well, so they can write them off. But yes, please explain the deductibles for auto expenses.
Okay. Again, this is one of those things where there's two ways to handle this. You should either have a vehicle that is solely used for a business purpose. If it's solely used for business purposes, then any costs connected with that vehicle are tax deductible. So as you said, if you have a leased car and you only use that vehicle for business, then you should be able to write 100% of the cost of that vehicle off for any business activities. Okay. Now, if you have a vehicle that you're using for both purposes, for personal and for business, then you'd have to track your mileage. And that's a little bit more difficult to do, but you can't you can't use all of the expenses for that vehicle as a write-off. Okay, so if you have a personal vehicle and you drive, um, let's say 1,000 miles, the current rate is 67 cents per mile. So you would make that calculation, and that's the amount that you could actually write off. And then the percentage of the total miles versus the percentage of the miles that you used for your business purposes, you get that percentage. And if you have to fix the vehicle, you can take that percentage of that cost off as a deduction.
Okay, so even repairs are, because the repairs are necessary for you to be able to continue to use the vehicle. So that would make sense. Okay. Health insurance.
Okay, so this is a really big one for me because if you get sick, you can't work. So a lot of people, health costs are really expensive. So a lot of people are like, well, I can't really afford health insurance. Well, if you're running a business, do as much as you possibly can to get the health insurance that you need, and you can write it off. It's 100% deductible. Okay. Um, so it's because it's a business expense. You need this in order to be effective as a business person. So, um, self-employed people, independent contractors, freelancers, any of those people can write their health insurance off, their health insurance premiums off. And one of the added benefits of this is if you have a family and you have a family plan, yeah, you write that off as well. You don't have to just kind of like percentage yourself out of it. You're getting health insurance and your family will be covered as well.
Right. Yeah, that's important. I'm glad you added that to the list. I know so many business owners who are like who don't have health insurance for the same reason that you mentioned, that it's an expensive addition to the toll that they're already carrying, and so I think that's excellent to know that it's 100% write off to get good insurance. Marketing and advertising.
Okay, so this is an interesting one because a lot of people, they do word of mouth. Okay, so if you're doing word of mouth, you can now look at your business and try to add some costs, some marketing costs for your small business and get the benefit of it being fully tax deductible. Okay. And this includes any number of things. A social media campaign. You can do ads in newspapers. You can do TV ads if you've got that kind of money. And if you do sponsorships or events like conferences or conventions that are connected to your marketing. So let's say you get a booth at a convention. That type of cost can be seen as marketing and advertising, and you can write that off as well. Okay, so for those people who maybe you're not thinking is in a big picture kind of way, you can be a little bit more aggressive at trying to bring more business in with those types of marketing campaigns, whether it's press releases, that sort of thing. But you have to keep really good records on these types of marketing expenses because, you know, you have to be able to verify it in case you get an audit. So any invoices, receipts, um, any payments that you make that are connected to any kind of advertising or marketing, you really need to keep good, very, very good records in case you get audited.
And the reason that's great to know as well, that kind of ties back into your subscriptions because there are some marketing programs that can be almost cost prohibitive. Like some of them can be really expensive. And so to know that if you're using these as to help, push press releases or push news releases, that they can be tax deductible. You can deduct them. That's great to know. Education.
Okay, so education is again another thing that I think is kind of important for folks because right now we're in a situation where technology is changing our world so fast, and as a business person, you know you can find yourself being left behind very quickly. There's more people are using technology to get ahead, and you don't want to fall behind. So, in terms of education, there's a number of things that you might want to do, and it's tax deductible. Okay, you can take classes that are in your area of expertise. And again, this has to be connected to your business. Okay, workshops and seminars also apply, and some of these things can have a significant cost, you know. So you can take these things to get yourself better educated in running your business and in, understanding your industry, which will give you a head up to actually do better in your business to make more money. Um, if you need to add subscriptions or books to help you get better educated, you can buy those things. That includes audio books as well, you know, to actually better educate yourself on a number of ways. And, things like um, courses that you take online, you can write those off as well. The other thing is if you are actually paying for education for some of your employees, that also might be tax deductible as well, depending on what it is.
And the 10th one is interest payments.
Okay. Interest payments. So every business needs a credit card. Okay. Some businesses take out loans. Something that a lot of people don't know is that so long as this debt is solely concentrated on your business, such as, you have a business related credit card, the interest that accrues on that account can be legally deducted. But the key thing is your business has to be liable for that debt. Okay. There are limits to this, but the limits are in the millions of dollars. So most people are not going to be, not going to, well, for businesses that have revenue under, I think, $27 million, you might not be able to deduct the whole thing. Now, there are some other limitations on this that are a little bit more complicated to explain. I don't know if I want to get into it right now, but this is something that you can ask your tax accountant to make sure that you're getting the full benefit. There are some um, limitations that instead of it being 100% deductible, you might only be able to deduct 30% of the interest. Okay, so depending on your business, you'll have to actually get a little bit more help in terms of understanding what you can and cannot deduct. There was one other thing that I think we neglected to talk about, and that was the legal and professional fees.
Yes. Thank you.
Some businesses need a lawyer. So isn't it great to know that if you have a small business and you have a lawyer, that you can deduct just about 100% of those fees from your lawyer to take care of your business situations.
Yes.
Okay.
That is, yeah, I did miss that one on the list. I'm so glad you brought that up because that is so important, particularly since legal fees and professional fees, as we know, can be expensive. And so you're saying we can deduct up to 100%?
In most cases, 100%. Now, and again, you're running a business, so you're going to get into some legal issues at some point if you're in business for, some length of time. And this could be tax issues, for instance. Okay. And you may need a lawyer to help represent you. You may be running a business and you can't go to court because you're meeting with a client. So you need your lawyer to stand in for you. That might cost you some money. Discrimination claims. You might need a lawyer to deal with that. Whether it's somebody discriminating against you as a business owner or someone saying that you discriminated against them. Um, and again, business sales, you might need a lawyer to go after the money that you are due from a client. So these are the types of things that you might be able to use a lawyer and actually be able to write it off and get the full benefit of having a positive outcome on your tax return.
Wow. Well, that was a great list. The 10 small business tax breaks that almost anyone can use. One of the things I'd like you started talking about it in at the beginning of the interview, and I'd like you to reemphasize it, is the importance of, everything that you talked about here requires good, I'm going to say note taking and record keeping, right? And so if you could just reemphasize the importance of, we all know that running a business can be taxing, right? Aside from we're talking about taxes, a play on terms here, but yeah, how important it is to, if you can't do it, if you can have someone else do it, or to create the systems that are available. There's a lot of technology now online that can help you do it. But please talk about the importance of just keeping records, keeping good records.
Okay. Record keeping is really, really important for a number of reasons. And anybody who runs a business needs to put some time into actually getting better at it. You know, there are courses that you can take online because this is an area that people are understanding needs to be, emphasized a little bit more these days. And you have to want to do it. I know a lot of people are like, well, I'm not good with finances or I'm not good. No, you have to be. If you're going to be in business, you have to just, pull up your pants, tighten your belt and put some time into actually understanding where your costs are in your business and where your money's going. Because that will give you two things. One, it'll help you get your taxes done a lot faster. But secondly, it's going to help you understand how your business is either doing well or not so well, because you're going to know where your money is. You're going to know where your costs are. You're going to be able to see, oh, this is too expensive. Maybe I need to look at ways of trying to bring down that expense. The more you pay attention to your expenses and these receipts and the things that you have to pour into your business, the more efficient you'll be and the better outcome you're going to have at the end of the year when you look at your total revenues. Because it's easy to just keep spending and spending and spending and spending. But at the end of the year, you got to understand what happened. And those receipts, keeping those receipts is going to help you understand that picture.
Thank you so much, Matthew Scott. Well, I've been twisting your arm offline to get you to come back more regularly. We'd love to talk about a lot more finance on this show. I'm one of those people, right, who, loves to talk about the creative aspects and, loves the stories about, how people get started. Those are my passion stories. But I myself, and I know a lot of other businesses, and I know people who are listening who really struggle with the financial pieces. And there's a lot of information that's out there that can benefit us. And so, yeah, I'm really grateful that you were able to come on and talk about these tax break tips. But I'm going to continue twisting your arm to see if we can get you back a few more times to offer your financial expertise to those of us listening. But as we wrap this up, is there anything else that you would like people to know and understand about this list in particular that you talked about today?
Well, yeah. Well, thanks for having me. I'm glad that I came on. Happy to come back. Your listeners should understand that this list gives you some information to take to your tax accountant to make sure that you're getting the most out of your returns. Okay. The more you understand about the taxes or the tax deductions that are due you, the better your results will be on your tax returns. So we're going to come on and talk about some other things later on when I come back. It'll be the same situation. You really need to take that information, because if you don't ask for certain deductions, you may not get them. Your accountant may not know some things that you bring to them. At least you have the questions to ask whether or not you are eligible for those deductions or not. And that's what we want. We want to make sure that you are knowledgeable about what you deserve as a paying tax payer.
And just a little further to that, I want you to reemphasize something that you talked about in the beginning, and I'm sure it would make things much easier for your tax preparer, but the importance of being a good record keeper.
Yes, 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 yes. Record keeping is really critical to your outcome in terms of getting your deductions. It's really important that you, as a business person, keep good records, because it's going to do two things for you. One, it's going to make sure that you have all your records in a good, nice pile in order, so that you can give them to your tax attorney or your tax accountant and get your tax return done quickly and efficiently. And secondly, by doing all of that work with your receipts, by going through and making sure that they're all in order, it's going to give you some better insight into how your business is running. You're going to know how much you paid for certain things and be able to see, well, that was kind of high. Maybe I can bring that cost down. You're going to be able to see who paid you on time, or what things you had a problem paying during the year. And it'll solve some issues for you in terms of, okay, why am I paying for these things or these services if it's not really helping my business make more money? Having all those receipts will help you in that process of making your business run a lot more efficient. So that's why you really need to take the time to actually get into record keeping and make sure that you're better at it. Don't get discouraged, because it's difficult. Don't get me wrong, it's difficult, but you really do have to put some effort in so that you can get better at it.
Excellent, excellent advice. Thank you, Matthew Scott, for sitting in with us today. As I said, I look forward to having you back. And for those of you listening, thank you for tuning in. And we'll be back again next week with another great guest.
The Business First podcast is hosted and produced by Sonia Alleyne. Executive producer Ken Johnson. Find the Business First podcast on Apple Podcast, Stitcher, Spotify, Odyssey, iHeartRadio, Amazon Music, TuneIn, or wherever you get your podcast. On social media on IG at business_first_podcast. Follow the Mean Old Line Media Podcast Network on IG at Mean Old Line Media. Get the Mean Old Line Media app in the App Store or Google Play. The Business First podcast is a Mean Old Line Media production.